Video Insights. My name is Jan. I'm one of the co-founders of Toggle, and for those of you joining us for the first time, we are going to take a deeper dive into one of the many insights that Toggle generates every day across thousands of US stocks. The focus today is going to be on Scotts Miracle-Gro, but if you'd like to follow these more closely and frequently, sign up to our YouTube channel or else check us out on toggle.global, where you can actually also try Toggle Copilot, the system we're using itself. Now, as you can see here, actually, we haven't really seen any particular price pressures that Toggle has been able to uncover from fundamental information that it continues to follow for this particular name. But then recently, there was the first one based on Analyst Revisions, and there's a confirmation with a similar price target of 263 that it also highlighted just now. So we're going to take a closer look at this, just clicking on this card. It opens up the underlying analysis that basically tells us what exactly the system is seeing and highlighting in this case. Now, what you're basically looking at is a picture that is put together based on these 10 prior occasions that Toggle was able to find whenever Analyst Revisions have continued to improve, when the outlook for the business prospects for this particular name have continued to improve. And so it recorded that over the following 6 months, on these 10 occasions, the company would have seen a rise in the stock price of almost 9%, which would put you from the current price of $241.97 just around $263.12 effectively. But you can see that there's a wide range of outcomes. And actually, although the horizon is 6 months, that's really the outer edge of what had previously happened. In many cases, you can see here, this target was reached much sooner, in fact, probably under a month. At the same time, very important to note that if the price doesn't really follow this pattern at all, and it actually dips below the red line, you need to reevaluate the thesis, because obviously something else might be driving, and this is a good time to potentially consider reassessing or even getting out of this position altogether. Now, why it might move, this is an important one to look at, and so you can see that the revisions for the sales outlook at these levels have happened previously, actually quite a number of times, dating back to as far as 2007. And so when that has happened, although you really need to squint a little bit to see it on the price chart up here, the stock really has historically rallied. And another way to see it here is looking at the past performance. You can see the immense skew of the outcomes whenever analysts had turned more positive for sales outlook. You saw some cases where the stock had rallied substantially more than the kind of just shy of 9% that the central case here is. And more importantly, the downside was much more limited. So the risk reward, the convexity of this trade is really quite attractive. Viewed another way, if you had invested $1 and reinvested in each of these 10 episodes, you would have had $2.50 of pure profit by now. So again, although quite a choppy trade, it definitely was a reasonably reliable indicator that correctly highlighted the directional pressures that the stock was facing. This is basically all we're really going to talk about in the case of Scotts Miracle today. In the daily brief, we also address some of the supply issues that the US economy is currently facing. So if you subscribe to it, it should already be in your mailbox, and if not, you can subscribe easily on toggle.global. Thanks for your attention.